Financial freedom is a journey determined by the ventures you choose to partake in. Watch until the end of this video to learn the 4 opportunities that have the potential to transform your life and set you on a path to enormous wealth. Venture capital investment is among the best opportunities to create wealth. Venture capital is a means to provide financing for a startup company. A company in its early stages might have an innovative business model, technology, or unique product, and need more funds to fund its operations. As a venture capitalist, this is an opportunity to invest in a company in exchange for an ownership stake.
Let's say you're a founder and you're going to pitch an early stage VC. Here's how that VC's business model works, right? So let's say in 2018, I start Yes VC, this early stage fund, together with my partner. And so for the sake of argument, let's say that our fund is going to be 50 million. So we're going to raise $50 million, right? So maybe we invest in it ourselves, but almost certainly we're also going to invite other LPs, right? People who invest in our funds.
Usually in the form of equity or convertible debt. In addition to capital, you will often provide strategic guidance, industry expertise, and a valuable network to the company. Depending on your stake and role, you can be active in the decision-making, helping navigate challenges, refine business strategies, and scale operations. Venture capital gives you the potential for significant returns. Once the startups receive funding, it's more likely that they will experience rapid growth, which will translate into substantial financial gains for you. For example, Uber started in 2010 with $1.5 million in capital. After venture capitalists contributed, the value increased by more than 400%. Venture capital will allow you to diversify your portfolio beyond the traditional asset classes. Allocating a percentage of your portfolio to a startup or an emerging company will enable you to access a different risk-reward profile. This diversification helps mitigate risks and reduces the effect of market fluctuations across your entire portfolio. By actively engaging in the startup's operations, you can bring your expertise, mentorship, and guidance on board, which can be very useful in pushing the company to greater levels. The opportunity to contribute your knowledge, network, and expertise is intellectually stimulating and personally rewarding. Venture capital gives you access to innovative and disruptive companies at an early stage. These startups usually operate in the technology, artificial intelligence, and clean energy industries. By investing in these companies, you get a chance to be a part of something that contributes to shaping the future and benefit from the potential growth of groundbreaking technologies. Before starting on venture capital, you must start by educating yourself to understand the basics of venture capital by reading books, articles, or YouTube. It is vital to have a solid understanding of the startup ecosystem and the sectors you are interested in. Determine your strategy by deciding your investment goals and horizon. It will help you to determine the amount of capital you are willing to allocate.
No surprise to anyone here, today venture capital is about $100 billion a year just in the US invested in companies. And for example, last year there were 7 firms that raised more than $1 billion each. That seems like a lot of money, but what you might not know is that that's actually a very, very small asset class in the world. It represents about 3% of the money in mutual funds, 16% of the money in hedge funds. And since 1970, on average, the venture capital industry in the US has invested about 0.3% of US GDP.
You can invest directly in a startup or a venture capital fund. Venture capital funds are managed by professional venture capitalists who make decisions for the fund's shareholders. Intellectual property or IP investments allocates financial resources to acquire, develop, and exploit intellectual property assets to generate income. Intellectual property is the intangible creations of the human intellect, such as inventions, literary and artistic works, designs, symbols, and names. Intellectual properties can be of different forms. The first is patents. These protect inventions by granting exclusive rights to the inventor for a given period. Patents are given to new and essential processes to add value to human life. Copyrights grant exclusive rights to authors and creators of original works, such as music, books, and software. This gives the creator total control over their work's reproduction, distribution, public performance, and adaptation. Trademarks are assigned to protect distinctive signs, symbols, logos, or phrases used to identify and distinguish an entity from one another. Trademarks provide brand recognition. The final form of intellectual property is trade secrets. Trade secrets include formulas, processes, or confidential information that gives a business a competitive advantage. Trade secrets do not require registration, but depend on the maintenance of secrecy. Investing in intellectual property can be done in several ways depending on the type of IP and the strategy of your choice. You can acquire existing intellectual properties by purchasing their owners' patents, trademarks, copyrights, or trade secrets. Buying the IPs is an approach that allows you to capitalize on the potential income associated with the assets. You can choose to develop the intellectual property by funding the development process. It will involve inventing new technologies, creating original works, or designing unique brands. Your goal will be to develop a valuable IP asset that can be protected and monetized. Licensing or selling IP assets to other companies or individuals allows you to generate revenue through licensing fees, royalties, or one-time payments. Licensing grants others the right to use, produce, distribute, or sell intellectual property at a cost while the investor retains ownership. By owning intellectual property, you significantly increase the value of your portfolio. Companies with strong intellectual property portfolios are often viewed as more valuable, attracting partners and potential buyers. Intellectual properties indicate innovation, market presence, and sustainability, impacting the market perception positively and enhancing the company's financial valuation.
My biggest moneymaker is called IP, intellectual property. Zero investment. So when I create that cash flow game, it's intellectual property, it's patented. It's in 50 different languages. Every quarter they send me a check. Zero investment into it. When I write a book, like this book here, I think I make about $600,000 a month just from royalties coming off this book. Because I sell the book to a book publishing company, and they send me a check.
It is an opportunity to make your company stand out in a competitive environment. Intellectual properties allow your business to expand and collaborate with others. Through licensing agreements, companies can access valuable IP assets others own, enabling them to expand to new markets or enhance their existing products. Intellectual properties enable partnerships or joint ventures with other entities, leading to mutual benefits and shared innovation. This is an opportunity to generate more income through collaborations. Peer-to-peer lending is an emerging trend growing exponentially, allowing you to capitalize on it. Also known as P2P lending, it is a form of social lending that occurs directly between individuals, bypassing traditional lending methods such as banks or credit unions. P2P lending takes advantage of online platforms that connect borrowers with lenders. You start by registering on a P2P lending platform. These platforms will act as an intermediary to facilitate the lending process and provide a marketplace for lenders to provide funds for borrowers to access the funds. After registration, you will set up an account by filling up personal information and verifying the data through an identification process. The next step is to identify and select the investment you want. Factors to consider are the interest rates you will get, the loan's purpose, and the borrower's credit worthiness. Assessing the risk involved will help you gauge the risk involved. Diversifying across multiple loans is advisable by lending smaller amounts to numerous borrowers. P2P lending offers higher returns than traditional fixed income investments such as savings accounts. By lending directly to individuals or small businesses, you earn interest rates that exceed the conventional forms, making it a very lucrative way to create wealth. The lending platforms provide access to opportunities traditionally limited to institutions such as banks and credit financing unions. By investing in P2P lending, you can participate in financing small businesses, real estate projects, and other ventures that could have been impossible to achieve through traditional means.
I said the IF ISA is an ISA account that allows you to lend your money to other individuals or businesses. Now, the reward that you get from doing this is that you will receive interest as the borrower repays the loan, plus you will get your money back once the loan has been fully repaid. And the benefits to the borrower is that this is another source of funding. So in case perhaps maybe they couldn't get money from the bank or they couldn't get as much money from the bank, this is another way that they can finance whatever they are doing.
Peer-to-peer lending allows you to diversify your portfolios beyond the usual asset classes like real estate and government bonds, offering an opportunity to invest across multiple options. It helps manage the risk of a single investment failing or during market fluctuations. P2P lending is an excellent way for investors to generate passive income. Once you make the initial financing, you will receive regular interest payments and sometimes principal repayments. This is an opportunity if you seek a steady cash flow or to diversify income sources. By eliminating traditional intermediaries, P2P lending minimizes the cost involved in lending money. You can earn higher returns due to lower fees and expenses than conventional methods. These platforms also offer flexible strategies regarding amounts, loan tenures, and reinvestment options. The flexibility allows you to tailor your investment according to your preferences and financial goals. Investing in stocks is a time-tested way to make passive income. Warren Buffett said that if you don't find a way to make money while you sleep, you will work until you die. He is a perfect example of how buying stock can grow wealth exponentially. Stock investment is a way of generating profits through purchasing shares or ownership of a company. You will buy stocks anticipating the company's value will increase, allowing you to sell them at a higher price. This is why buying stocks as soon as possible is highly advisable. When you buy stocks, you become a partial company owner, giving you the right to vote on certain corporate matters, such as board elections or significant company decisions. Stocks are generally highly liquid, meaning you can buy and sell them quickly in the stock market. This liquidity allows you to quickly convert them into cash, providing flexibility in asset management. Some investors adopt a long-term approach to benefit from a company's growth over time. For instance, you invest in GHI Corporation, a renewable energy company, believing the industry will expand significantly in the coming years. You buy 1,000 shares at $10 per share, totaling $10,000. Over several years, if GHI Corp thrives and its stock price rises to $50 per share, your investment would be worth $50,000, resulting in a substantial gain. This is one reason to venture into stocks if your goal is to create wealth for a long period. To invest in the stock market, first, you need to identify the purpose of your venture. What do you want to achieve? This will determine your approach to purchasing stocks. Your goal could be capital growth as a short-term investor or to grow and protect your wealth if investing long-term. Your goal must stay up to date by constantly renewing them to keep you focused on achieving them. You can choose to manage your investment and portfolio by yourself if you have the capacity, or you can pick an experienced financial advisor to do so for you. Selecting an advisor is a good option for a beginner who wants the help of an expert in making decisions and monitoring a portfolio. You can also use an automated program or a robo-advisor to do it for you. This is a less costly approach than hiring a financial advisor. Diversifying your stocks is crucial as you want to put only some of your eggs in one basket. This is achieved by venturing into various companies to spread out the risk involved with market fluctuations. With a diverse portfolio, you will not be worried about the failure or collapse of a single company, and it gives confidence and exposure to different companies. Choose an account that matches your goals. For example, if your goal is to invest for retirement, you can buy stocks or mutual funds through a retirement plan, such as a 401k. You can authorize your employer to make contributions on your behalf to your plan automatically. It is a great way to do it with little effort and make income passively. You can also open an individual retirement account and start investing from various options. There are many different ways of investing in stocks. You can buy individual stocks or purchase shares in a mutual fund or exchange-traded fund. Mutual funds are assets where multiple investors pool their money to stake in a diversified portfolio of stocks. A professional manages mutual funds and ETFs, making it a good option if you want to avoid picking individual stocks. Information is the best tool for your journey. You must constantly educate yourself and keep up with the current trends. That being said, a subscription to this channel would be beneficial as you learn from our videos. Remember, the earlier you start, the more time your money has to grow. Thanks for watching. I hope you found this video helpful. Please share your thoughts in the comment section below, leave thumbs, and share with friends and family. Until next time, stay hungry for more.